Let's talk to Ryan Littlestone. He's a trader and analyst at ForexFlow.live. Very good morning to you, young Ryan.
Good morning, Nick.
Right, you've sent 3 thought-provoking slides. Let's kick off with the first one without further ado. The US-China trade war. Very good picture, sir. What is this telling the crowd?
Well, this is the main theme hitting markets at the moment. You know, we've got all this trade war talk going on, the new tariffs announced last night, more to come possibly, China responding. But what we're seeing is it's not really hitting the FX markets that hard.
Right.
We've got a bit of a split in FX markets, really. We're really seeing the risk trade, you know, Swiss and the yen reacting more than the other pairs. You know, look at dollar yen, it's done nothing, you know, even over the news last night, it moved maybe 20, 30 pips. But in the risk pairs, it's moving. And what that's creating for traders in the core pairs, in the majors, like euro dollar, is we're seeing the defined levels holding. You know, we're not breaking any new ground, we're not busting out any of the ranges, and that's good for traders because what it means is you can lean against these well-defined levels and you can trade them, you can short, long against them, pick your spots, you don't have to mess around in the middle. Yeah. But you know, if you look at the euro dollar chart as we've shown here, if you look at the euro dollar chart as we've shown here, we've got a very strong top up at the 1740 handle, and we're seeing that defended around 1720. And these are the types of levels you want to trade. I had a short last week on 1720, got out in the drop all the way down, and then had a trailing stop hit at 80 on the way back up yesterday. But you know, as I say, for traders looking at these defined levels, and the news is not breaking these defined levels, it's very good for trading and leaning against.
Understand. Well, let's move on to the cable chart. Obviously, we've had a rally in the cable and obviously had the corresponding move south in the FTSE 100. Where do we go from here?
Well, it's all about Brexit. This is one pair that's ignoring really the trade news. It tends to get pulled around a bit by guppy or sterling yen, as we call it. Again, on that's being more hit on the trade news. But as far as cable is concerned, you know, it's brushing off all that, and it's brushing off any negative Brexit news, and we're seeing more and more rounds of positive Brexit news. You know, where the EU have said that they're happy to do a trade deal once the border's been negotiated, and that's cleared up. Everything about Brexit is pointing to a positive outcome, and the pound's responding to that, and we've seen it do nothing but gain and gain and gain. It's definitely in a buy the dip mode. I would have loved to have got a decent dip last week, you know, to get on, but you know, the headlines have stoked the move higher.
Right.
We're always one headline away from seeing a 100, 200 pip drop in this pair. So you know, caution is advised. But I think that now going into October and possibly November, maybe even this Salzburg meeting next week, it's going to end up positive for the UK as far as Brexit goes.
So for choice, you're a buyer of sterling.
Yeah, pretty much so. But you know, as I say, pick your levels, and you still got to keep the trades fairly tight and under control because, as I say, one headline can knock it all for 6.
On that note, Ryan, we've run out of time. That's Ryan Littlestone. He is a trader and analyst at ForexFlow.live. Thank you.
Cheers, Nick.